Hey everyone, welcome back. Today, we're taking a deep dive into Aprameya Engineering Limited.
Oh, interesting.
Yeah, we've got their company website pulled up and some interesting financial snapshots from a screener.
Okay.
We're going to be like, think of us as your financial detectives for the next few minutes
Okay.
as we try to figure out what this company's all about, and more importantly, what its potential might be.
I love a good mystery.
All right.
What have we got? What's our first clue?
Well, right off the bat, their website tells us they've been around for over 20 years,
Okay.
founded back in 2003, and they're all about care, innovation, and passion.
Nice.
They even brag about having over 2,200 happy clients and more than 200 completed projects.
That's pretty good. 20 years in the healthcare industry, that definitely says something.
Yeah, not too shabby, right?
So they're working with hospitals and medical care centers?
Yeah.
What exactly are they doing? Are they building them, supplying them? What's the deal?
Okay, so let's unpack this.
Okay.
Their About section highlights two main parts of their business.
Yeah.
First, they establish healthcare infrastructure.
Okay.
We're talking ICUs,
Mhm.
operating rooms, even prefabricated wards.
Wow.
Imagine, they're literally building the spaces where healthcare happens.
So they're in the construction business, but hold on.
Yeah.
I'm seeing a whole section on their website called Medical Equipment Solution. That's not just bricks and mortar.
You got it.
Okay.
It's their second big business segment, supplying high-value medical equipment.
Okay.
And we're not just talking about a few thermometers and bandages here.
Right.
They're providing ventilators, dialysis machines, imaging equipment, you name it.
Wow.
They're basically equipping hospitals from top to bottom.
That's a pretty comprehensive approach.
Yeah.
It's like they're a one-stop shop for hospitals.
Mm-hmm.
Need a hospital. We'll build it and be filled up with everything you need to get started.
Exactly. It really makes you wonder about their network.
Yeah, good point.
Who are they partnering with to get all this equipment?
It takes a lot of connections to offer such a wide range of medical equipment.
Oh, let's see.
Okay.
Aha. They have a section called ROEMs.
Oh,
And get a load of these names. Draeger, Schiller, Stryker.
wow.
We're talking about some major players in medical technology.
That's a very good sign.
Yeah.
Working with these big OEMs, it tells us Aprameya has serious industry connections and access to some top-notch equipment.
Okay, so we've got this company that's been quietly operating for 20 years, building hospitals, supplying equipment from big brands.
Right.
They're like the hidden giants of the healthcare world, right?
They could be.
Mm-hmm.
But before we crown them, we need to look at the numbers.
Right.
What do those financial snapshots from Screener tell us? Because a good story doesn't always translate into a good investment.
All right, let's dive into the financials.
Okay.
First off, Aprameya is listed on the NSE SME, which means it's on the smaller end of companies listed on the National Stock Exchange of India.
Mm-hmm.
They have a market cap of 131 crore. And get this, they've seen some pretty impressive sales and profit growth over the past 3 years.
Growth is always a good sign,
Right.
especially consistent growth over multiple years.
Yeah.
It suggests there's real demand for what they're offering.
Uh-huh.
But remember, we need to look beyond the surface.
Yeah.
Growth alone doesn't tell us the whole story.
True.
Right.
What else are we seeing in these numbers?
Well, one thing that pops out is their strong ROE, or return on equity.
Okay.
That's a good sign.
Mhm.
It basically tells us how efficiently they're using their shareholders' money to generate profits.
Right.
However,
Yeah.
there are a couple of things that might raise an eyebrow.
Oh.
First,
Yeah.
Screener is flagging potential interest capitalization,
No.
which is something we need to unpack.
And I'm also seeing something about high debtors.
Ooh, okay.
What exactly does that mean?
So high debtors means they're having trouble collecting payments from their clients.
Mm-hmm.
And their debtor days figure is a whopping 325. To put that in perspective, it's taking them almost a whole year to get paid for their work.
Yikes. That's a long time to wait for your money. Could this be a sign of trouble brewing?
It's definitely something we need to investigate further.
Yeah.
Is this just how their industry works, or is it a red flag about their business practices? The answer to that question could make a big difference to a potential investor.
Okay, so to sum up what we know so far, Aprameya is a major player in hospital infrastructure and equipment with a solid network of partners and a history of growth.
Uh-huh.
But we're seeing some potential cracks in their financial foundation with those high debtors and potential interest capitalization issues.
Summarized.
Yeah.
Now, I'm curious, what's catching your attention about Aprameya so far? What jumps out at you from all of this?
Honestly, I'm fascinated by this combination of construction and equipment supply.
Right.
It's a unique position in the market, and they seem to have the experience and connections to pull it off.
Yeah.
But those debtor days are really setting off alarm bells for me.
I agree. That's definitely an area we need to explore further.
Yeah.
And remember, we're just scratching the surface here. There's a lot more to uncover as we dig deeper into their financials.
Absolutely. Now, before we move on, I want to remind everyone listening that this deep dive is purely for educational purposes.
Of course.
We're just sharing our observations and analysis, not giving financial advice.
Right.
Always do your own thorough research before making any investment decisions.
Couldn't agree more.
Investing in the stock market carries risks, and it's crucial to do your homework and make decisions that align with your own financial goals and risk tolerance.
Absolutely.
All right, ready to dive deeper into Aprameya's financials?
Let's do it.
Let's see if we can solve this mystery.
I can't wait to see what we uncover in part 2 of our Aprameya investigation.
Yeah.
Stay tuned, folks. Welcome back, detectives. Ready to dig deeper into Aprameya's financial statements.
Absolutely. We left off talking about Aprameya's impressive sales and profit growth.
Right.
But also those red flags around high debtors and potential interest capitalization.
Right.
Where do we go from here?
Well, let's start by unpacking those high debtors a bit more.
Okay.
Remember, it's taking Aprameya almost a year to collect payments from their clients.
Yeah, it's crazy.
That's a lot of money tied up, and it could be a sign of trouble.
Yeah.
So the big question is, why is this happening?
Is it something specific to Aprameya, or is it just the nature of the industry they're in? Maybe everyone in the hospital, construction, and equipment business has to wait a long time to get paid?
That's a good point.
Yeah.
It's possible that hospitals, being large and complex organizations, have slower payment processes.
Right.
But even so, 325 days is a really long time.
Yeah.
It's worth digging deeper to see if there's something more going on.
What could be some other reasons for these high debtor days?
Well, it could be a sign that Aprameya is working with clients who have poor creditworthiness.
Oh.
Maybe they're taking on risky projects to fuel their growth, and those clients are struggling to pay their bills.
Right.
Or it could indicate problems with their internal credit policies.
Right.
Maybe they're not doing a good job of vetting clients or enforcing payment terms.
So high debtors could be a symptom of a bigger problem, like aggressive expansion or lax credit controls.
Exactly.
That's a pretty unsettling thought for potential investors.
It's a yellow flag that warrants further investigation.
Yeah.
We need to look at the quality of their client base, their credit policies, and their overall risk management practices.
All right, let's move on to the other red flag we
Yeah.
spotted. Interest capitalization.
Sure.
You mentioned this earlier, but can you explain what it is
Yeah.
and why it might be concerning?
Interest capitalization basically means adding unpaid interest expenses to the principal balance of a loan.
Okay.
It's an accounting practice that's acceptable in certain situations, like when a company is constructing a long-term asset.
So if Aprameya is building a hospital and taking out a loan to finance it, they might capitalize the interest on that loan during the construction phase.
Exactly.
Isn't that right? And that's not necessarily a bad thing.
Okay.
But the reason Screener flagged it as a potential concern is that interest capitalization can sometimes be used to make a company's earnings look better than they actually are.
So it could be a way of masking their true cost of financing and inflating their profits.
Potentially, yes.
Wow.
We need to dig into their accounting policies
Yeah.
and see how they're applying interest capitalization.
Yeah.
Are they following the rules, or are they pushing the boundaries to make their numbers look more attractive?
It sounds like another area where transparency is key.
Absolutely.
Investors need to understand what's really going on behind the scenes.
Transparency is crucial in financial reporting.
Yeah.
It allows investors to make informed decisions based on accurate and reliable information.
Okay, we've dissected those two red flags.
Right.
Now let's zoom out a bit and look at the broader financial picture.
Okay.
You mentioned earlier that Aprameya has a strong ROE, which is a positive sign. Yes. Can you explain what ROE means and why it's so important for investors?
Sure. Okay. Return on equity, or ROE, is a measure of how effectively a company is using its shareholders' money to generate profits. It's calculated by dividing net income by shareholder equity.
Right.
A high ROE generally indicates that a company is using its investments wisely and generating good returns for its investors.
So in Aprameya's case, their strong ROE suggests that they're profitable and efficient with their capital.
It does.
But how does that square with the concerns we've raised about high debtors and potential interest capitalization?
That's the million-dollar question.
Right.
It's possible that their strong ROE is being driven by factors that aren't sustainable in the long term.
All right.
Maybe they're achieving high profits by taking on risky projects and delaying payments to suppliers, or they could be using aggressive accounting practices to inflate their earnings.
So a high ROE doesn't always tell the whole story?
We need to look at the underlying drivers of that profitability and make sure it's based on sound business practices.
Precisely.
Yeah.
We need to consider all of the financial pieces together and form a holistic view of the company's financial health.
All right, let's shift gears a bit and talk about Aprameya's strategic focus on specialized solutions.
Sure.
Particularly in dialysis and chronic kidney disease management.
Okay.
They seem to be betting big on these areas.
Right.
Why do you think that is?
Well, there are a couple of reasons why Aprameya might be focusing on these specialized areas.
Right.
First, the demand for dialysis and CKD management services is growing rapidly in India. As the population ages and lifestyles change, the incidence of chronic kidney disease is on the rise.
So they're tapping into a growing market with a lot of potential.
Exactly.
That makes sense from a business perspective.
And second, by focusing on niche markets, Aprameya can potentially command higher margins and differentiate themselves from the competition. They're not just building generic hospitals. They're offering specialized expertise and turnkey solutions that cater to specific needs.
It's like they're carving out their own little corner of the healthcare market where they can be the experts.
Right.
Yeah.
It's a smart strategy if they can execute it properly.
Right.
But it also requires specialized knowledge and a deep understanding of these specific markets.
So they're taking a calculated risk.
Yeah.
They're betting that their expertise in these niche areas will give them a competitive edge and drive future growth.
Exactly. And it'll be interesting to see how this strategy plays out.
Yeah.
Will they be able to capture enough market share to justify this focus?
Right.
Will their financial performance support their ambitious plans? Only time will tell.
Well, we've covered a lot of ground here.
We have.
We've talked about Aprameya's impressive growth, their financial red flags,
Right.
and their strategic focus on specialized areas.
Right.
What's the big picture starting to look like to you?
To me, it looks like Aprameya is a company with a lot of potential, but also some significant risks.
Yeah.
They're operating in a booming market, they've got a unique business model, and they're making strategic moves to capitalize on emerging trends.
Right.
But they also have some financial vulnerabilities that we need to keep a close eye on.
It's like they're walking a tightrope.
That's a great analogy.
Yeah.
And it raises an important question for potential investors. Do we believe that Aprameya's management team can successfully navigate these challenges and deliver long-term value?
That's the question we'll try to answer in the final part of our Aprameya deep dive.
Great.
We'll take a closer look at their management team, their competitive landscape,
Okay.
and their overall prospects for the future.
Don't miss it. We'll be back soon with the exciting conclusion of our Aprameya investigation.
All right, we're back for the final part of our deep dive into Aprameya Engineering Limited.
Yes, we are.
We've uncovered a lot about this company.
We have.
From their impressive growth to those lingering financial concerns. Now it's time to connect all the dots and see if we can figure out what the future holds for them.
You know, it's interesting. We've been talking about Aprameya's potential in the growing healthcare market in India and their strategic focus on specialized solutions. But there's another piece of the puzzle we need to consider. The rapidly changing nature of healthcare itself.
What do you mean?
Well, think about all the advancements we're seeing in telehealth and remote patient monitoring.
Oh.
These technologies are changing the way healthcare is delivered, and they could have a major impact on a company like Aprameya.
That's a really good point.
Yeah.
If more and more healthcare services are being delivered remotely, will that decrease the demand for traditional hospitals and the infrastructure Aprameya provides?
That's the big question, isn't it?
Yeah.
It's certainly possible that the need for physical hospital space could decrease as telehealth becomes more prevalent.
Right.
But even with remote healthcare, you're still going to need some level of infrastructure and equipment, even if it's different from what Aprameya currently offers.
So they might need to adapt and start providing things like telehealth platforms, remote monitoring devices, or data management solutions.
Exactly. And this is where their ability to innovate and stay ahead of the curve will be crucial.
Right.
Can they evolve their business model to meet the changing needs of the healthcare industry, or will they get left behind as technology disrupts traditional healthcare delivery?
It's a challenge for sure, but it could also be a huge opportunity.
Absolutely.
If they can successfully integrate these new technologies into their offerings, They could unlock a whole new level of growth.
And it all comes back to our earlier discussions about their financials and their management team.
Yeah.
Do they have the financial strength and the strategic foresight to make these kinds of investments?
Right.
Do they have a management team that's capable of adapting to rapid change and making bold decisions?
These are the key questions that potential investors need to be asking.
Yeah.
It's not enough to just look at their past performance.
Right.
We need to assess their ability to navigate the future of healthcare and make the necessary adjustments to stay competitive.
It's almost like we've reached a fork in the road with Aprameya. They've got a lot going for them, but they're also facing some crucial decisions.
Right.
The path they choose could make all the difference in their long-term success.
So to wrap up our deep dive into Aprameya Engineering Limited, it's a company with a compelling story, impressive growth, and a strategic focus on a booming industry.
Yes.
But they also have some financial vulnerabilities and a need to adapt to the evolving healthcare landscape.
And as always, it's important to remember that our analysis is just one perspective. It's based on the information we have available, and it's always subject to change.
Right.
Investing in the stock market involves risk.
Yeah.
And it's essential to do your own research and make decisions that are right for you.
Couldn't agree more.
Yeah.
We're not giving financial advice here.
Right.
We're just trying to provide some insightful analysis and encourage everyone to think critically about the companies they're considering investing in.
If you enjoyed this deep dive, please be sure to like, comment, and subscribe to our channel.
Yes.
We love hearing from our listeners, so let us know what other companies or industries you'd like us to explore in future episodes.
And until next time, happy investing.